So a couple of days ago, Nvidia released their latest earnings, and everything was great. Literally, like there's nothing to complain about. It's as good as it's ever been for any company, and they're on a good way to basically become the biggest company by market cap at this rate. I mean, if they have a couple of more of these kind of increases in the coming year, I wouldn't be surprised if they even surpass Apple and then Microsoft, which at the moment is the biggest company on the planet by market capitalization. Everything, as I said, is good. So then why do I do this video and why am I a bit cautious? And to be honest, if you're an investor in Nvidia, in my opinion, you shouldn't be worried for the, let's say, next quarter or the quarter after that, or even the one after that, because the demand is there and everything looks fine. But I think there are like some historical comparisons with other companies, and even in recent times, like for example, if we look at Tesla, you can see that the stock price peaked in 2021, late in 2021, at almost around $400. And this is like, going from $15 or something like that in 2019, and in a span of 2-3 years, it went from 15 to 400. So that's like what, 25-30 times increase in price, which is in a way very similar to Nvidia's increase in price in the past 2-3 years. But then what happens? So you can see that Tesla 3 years later now still hasn't recovered. In fact, it's like, it put just lower lows and then it kind of went up a bit and then it back down again, and now we're at around 170 or something like that. So why do I see do I see something like this happening with Nvidia? Well, maybe not like a copy of this, but you can see that the gross margin of Tesla increased in 2021, and most Tesla bulls, including myself, believed this is gonna continue, maybe not at this kind of insane pace. I mean, maybe we would go back to low 20s, but stay there. But then you can see that it's just going down for much more than that. And it's been a very tough time for automotive sales. With the increase of interest rates globally on most developed economies, and that's where Tesla sells most of their cars. There's simply not enough demand due to the consumers being weak. So this meant that Tesla had to decrease their prices on their cars, and it's been in addition to that, price war going because of so many new Chinese brands coming online. It's not just NIO, there's so many other companies, so they simply had to decrease their prices and the gross margin took a hit. And I believe something similar to this could happen in Nvidia sooner than later. Now, it's not gonna be probably as bad as Tesla, but as an investor you should think about where you put your money and at least be aware of what your exit plan is. And the whole point of the video is to not to scare Nvidia investors. That's not the point at all. I have huge respect for the CEO, which I believe is even more business savvy than AMD's Lisa Su, and that says a lot. But I think it's just for you guys that are investing in Nvidia, you should consider your exit plan. When do you think this company is fairly valued? Because look at this, the net income has increased from, it's just insane. Look at this, in the past year, so compared to the same quarter last year, they increased their revenue by 2.5 times, but the net income went from 2 billion to almost 15 billion. That in itself is insane. Like the fact that they increased their revenue by 250% is just bonkers. This is insane. The fact that they increased their net income by 600%, even more insane. And the fact that they are making 15 billion net income, that's at this run rate, something like 60 billion, 70 billion of net income for the full year. And if you have a company that makes 70 billion of net income, let's say, for 1 year, and you take a PE ratio of 20 times, that's 1.4 trillion. You take 30 times, that's 2.1, and 40 times, that's 2.8. Let's say 3 trillion. And 30 times earnings is not, it's expensive, but it's not super expensive. And I don't know if most people would have believed that their net income would increase by this amount last year, or even more difficult 2 years ago. No one would have believed that they would have made 15 billion of net income every quarter. So again, I'm not arguing in fact, like AMD at this stage is more expensive on a PE ratio basis than Nvidia. But I think you cannot just look at the numbers nominally and stationary. Like you have to think about where is this company going and where is the competition going. So look at this way. The huge increase here is also due to the fact that they were first. So they were like, the first mover advantage, and AMD was a bit slow, and Intel is even more so slower. AMD just entered like high volume production for their equivalent of data center, because let's be honest, like all those revenue that you saw, everything is essentially coming from data center. You can see that gaming is essentially stagnating, and all the other segments are, even like this one that's increased by 45%, it's on a basis of 300 million. So this is nothing. Like, the whole like 2 trillion addition of market capitalization to Nvidia is coming from data center, of which most of it is compute, but quite a substantial bit is actually networking. And you can see that the networking last quarter was larger than the gaming. So data center is number one, and then within data center, the small one, networking, is even larger than essentially everything else together. So this is just insane. But yeah, so you can see that Nvidia had the first mover move, and it's like, in my opinion, AMD now is gonna play catch up, and Intel, but also the other, for example, Microsoft and Google, they are having their own internal TPUs, which is a competitive solution to the GPUs. Now, they're not like apples to apples, but think of it like almost like doing the same thing, but it's a bit different. But anyway, so in terms of like the GPU, so again, forget the TPUs that Microsoft and Amazon and also Google or Alphabet are making for their internal usage. But on the GPU side, where you have obviously Nvidia, which has like 96% of the market or something like that, and you can see it here. So in Q4 last year, they had 18.5 billion of data center revenue, of which basically 15 billion was like, their GPUs. AMD's equivalent number was 2.3 billion, but remember, this is not pure 100% data center the same way that Nvidia reported. So AMD also includes their CPU on this. So I would say, like, if we are assuming 1 billion of half a billion there, you can already see, let's assume 700 million of MI300 chips, and basically that's the AMD's equivalent of Nvidia's data center chips. At 700 million for that quarter, that's like what? That's 20 times, 25 times less than Nvidia. So Nvidia has, like, I don't know, as I said, 95% of the market share. But with one big caveat, AMD is, like, late. They are 6 months to a full year later than Nvidia. And this is very important, because when we looked at these numbers here, you can see that, look at how big a jump Nvidia had from Q1 last year to this year. Within 1 year, they ramped up. Now, am I saying that an AMD will have the same kind of ramp up? Maybe not, probably not. But you will probably see something similar with AMD as well. And yeah, they are essentially 9 months to a year later than Nvidia. So you should see a big increase from the assumed 700 million here of this. Like I said, 1/3 of their entire data center was MI300 chips for AI. Now, and also there's another one caveat, and that's also the fact that Nvidia is selling them on a more expensive price because they are the market leader. They have the established software and everything, the established sales channel. So it's very difficult to know outside how much the average selling price is for each of these chips. But I think most people would agree that Nvidia has a higher price, and a lot of people think there's anywhere between 50% to 100% higher price. This means that Nvidia has higher margin, but also this means, like, if AMD is selling 700 million, as I assumed, in this Q4 of last year, like sales wise, it's 700 million, but volume wise, it would be equal to, let's say, 1.4 billion in Nvidia sales. So in that sense, in terms of volume units, like units of products, chips being sold, I think maybe AMD already has like 5 to 10% of the market. So sales-wise, revenue-wise, maybe 2-3% of market share. But yeah, unit-wise, maybe 5 to just below 10% at best. So it's a bit better in that sense, because it means that sure, you are getting less money for your chips, but at least you are having some decent volume out there, and this is just before the ramp. So how does it affect Nvidia's future? Well, in my opinion, it all depends on when the market is the demand is satisfied out there. I don't believe that any company is gonna pay Nvidia this amount of there is no need for buying all these GPUs all the time and increase them quarter on quarter, like 10-20% each quarter. I think at some point we're gonna hit a realistic wall. I don't know when that is coming. It's very difficult. I'm trying to find out what is the real size of the market out there for Nvidia and also AMD to sell these GPUs to. But I believe like we are getting somewhat close to that kind of limit, and you should have an exit plan, and like you should really focus on when is that demand is gonna be tapering off, and when will AMD and also Intel later on hit volume production and maybe challenge Nvidia price wise, and maybe they cut the gross margin of Nvidia from 78% that they have now, because they are essentially unchallenged and there's infinite demand. But no one believes that they're gonna have that kind of infinite demand forever, and so when that point comes, the gross margin will go down, because then there is more options out there. Nvidia, AMD has good solutions, Intel will even have good solutions maybe a year and a half into the future. So what's realistic? Maybe the gross margin goes back down to this level or somewhere thereabouts. Maybe the revenue goes down a bit because the average frame price goes down a bit, the volumetric demand, so there's not as much demand because every big company out there, Apple, Google, Facebook, Microsoft, has spent already huge on these data centers. So now they have to use that. It's not like they can buy every single quarter new data centers. There has to be a real demand out there, otherwise they won't stop buying it. So I think there's also that part of it. So then there's actually one idea that I had, because according to this article, 80% of Nvidia's HBM memory for these chips is coming from SK Hynix from Korea. The other parts are probably coming from Micron and Samsung. And in the memory, I think there's the three big players: SK Hynix, Micron, and Samsung. Samsung had some issues as well as Micron with the HBM, the newer HBM versions. But I think they are, especially Samsung, seems to kind of go ahead of SK Hynix very soon. I don't know, but yeah. So there's some some articles coming out recently that AMD did a deal of $3 billion for a HBM memory from Samsung to their MI300 data center chips. And the thing that immediately hit my brain basically is that the 3 billion deal, is it for 1 year, 2 year, or 3 years? I think probably maximum 3 years, because it's HBM3E, and by 2026 HBM4 is gonna be online on the market. So I think the lion's share of it is for this year and next year, 2025. Maybe stretch it halfway through 2026. And if we assume 1.5 billion of memory for this year, HBM memory, how much revenue will AMD bring in with that 1.5 billion? Well, we know that AMD is not gonna, obviously the HBM memory is not the entire part of the chip. You have the chips as well, the packaging and everything. So I try to get a number on that, and some people, again, take this with a grain of salt. Most people believe that 3 billion deal from AMD to Samsung for HBM could mean anywhere between $6-7 billion in chip sales to maybe at best 15 billion. And that's that's quite a bit for a company. Oh, again, remember that that's for 2 years, but that's quite a bit for a company of AMD size. Remember, again, like I assumed that last year, latest quarter, they sold 600-700 million of those kind of chips, and this year they started with indicating at Q4 last year, they indicated for 1.5 billion of MI300 sales. Then she increased it to 3.5 billion in the Q1 of this year. And now they recently increased it as well to 4 billion. So yeah, think about it, 4 or 5 billion maybe this year, and potentially 10 billion next year. And 10 billion of AMD revenue with less average selling price is maybe like 15-20 billion of Nvidia in terms of volumetric units sold. And at that point, AMD has like 25% of the market. And if you have 25% of the market in terms of volume, I don't think Nvidia will be able to increase the gross margin more than these kind of levels. Maybe a bit more, depends on how fast AMD increases. But I think when the market is saturated, I don't believe Nvidia will be able to hold these margins. And at that point, when the revenue is taking a hit and gross margin taking a hit, then you should be, ahead of time. Then you should clearly have some kind of exit plan before that news become available to the market, because then the stock price will be affected probably. I'm not saying that Nvidia is gonna go anywhere. In the next 5 years, they're gonna be the market leader most likely. I mean, I cannot see AMD or Intel, becoming the dominant player here. So that's not what I'm saying. I'm not arguing for Nvidia going away or anything like that. But I'm arguing like, are they gonna be able to have this kind of, being essentially top 3 biggest companies on the planet? Because when that day comes, when the revenue is not increasing and the margin goes down, or even revenue decreasing in this segment, which I mentioned again, is, essentially now it's like what? It's 85% to 90% of their entire business. And if that 90% takes a hit, these kind of segments, gaming and professional visualization, automotive and the other, they're not going to be able to bear the load of a company that has a market capitalization the same size of Apple. This other revenue is combined 3.5 billion per quarter. That's like 12 billion. And if they make 2-3 billion of income based on that 12 billion, how is a company excluding the data center gonna be justified to have 3 trillion market capitalization based on 3 billion in net income? But again, that's not gonna happen. That's not black and white. Data center is gonna be good for Nvidia a long time now. But maybe be careful with how much you invest in the company. And I think that's gonna do it for today. And thank you for watching, and see you in the next one.